Hello and welcome. In this presentation, we will be exploring the master budget, which serves as a company's comprehensive financial blueprint for a given period. We will discuss how the master budget integrates planning, control, and strategy for the entire organization. Our agenda for today provides a full overview of the budgeting process. We'll start with the fundamental question of why budget, looking at the dual purposes of planning and control. We'll then explore the human side of the process by discussing who creates the budget. After that, we will introduce the master budget itself, and then look closely at the interconnected flow of all its component parts. Finally, we'll see how a well-prepared budget answers the 10 key questions that management needs to know about the upcoming period. It's important to understand that budgets are far more than just a set of numbers. They serve two primary purposes for any organization: planning and control. As a planning tool, budgets are essential. They encourage managers to think strategically and plan for the future. They help communicate the company's financial goals throughout the organization, and they are used to allocate resources like money and people to where they can be used most effectively. They also coordinate the plans of different departments and can help uncover potential bottlenecks before they become major problems. As a control tool, budgets allow us to compare our actual results to our plan, which helps us improve the efficiency and effectiveness of our operations. And finally, they provide a basis for evaluating performance and rewarding employees. Creating a budget involves a crucial decision about process and people. There are two main approaches: top-down and self-imposed. In top-down budgeting, top-level managers issue profit targets down to lower-level managers. The main advantage of this approach is that it ensures the budget is aligned with the high-level strategic vision of the company. The downside is that it can be demoralizing for employees and may be based on unrealistic targets if it ignores valuable operational knowledge. The alternative is a self-imposed or participative budget, which is prepared with the full cooperation and participation of managers at all levels. The pros are significant. It leverages detailed operational knowledge for better accuracy, it increases motivation, and it creates a powerful sense of ownership. The main con is that managers may create budgetary slack to make their targets easier to achieve. Because of these trade-offs, most companies use a combination approach where estimates from lower-level managers are reviewed and approved by higher management. This ensures the budget is both realistic and strategically aligned. Now, let's introduce the master budget itself. The entire process begins with one crucial document: the sales budget. This is an estimate of the expected sales for the upcoming budget period. The sales budget is the absolute key to the entire process. If the sales forecast is inaccurate, the rest of the master budget will be inaccurate as well. It directly influences the variable portion of the selling and administrative expense budget, and most importantly, it feeds directly into the production budget, which determines how many units the company needs to produce. The master budget is a comprehensive and interconnected system of many individual budgets. This flowchart shows how all of those pieces relate to one another. As you can see, everything starts with the sales budget. The sales budget drives both the production budget and the selling and administrative expense budget. The production budget in turn drives the three manufacturing cost budgets: direct materials, direct labor, and manufacturing overhead. Information from all of these operating budgets then flows into the cash budget. Finally, the entire process concludes with the creation of the two main pro forma financial statements: the budgeted income statement and the budgeted balance sheet. While putting together the 10 schedules of a master budget can seem like an overwhelming process, it is important to see the big picture. A well-prepared master budget is designed to answer 10 critical questions for management. These questions include: How much sales will we earn? How much cash will we collect from our customers? How many units do we need to produce? How much raw material will we need to purchase? How much conversion cost, meaning labor and overhead, will we incur? How much will we pay our suppliers and direct laborers? How much selling and administrative expense will we have? How will our cash balance change? How much net income will we earn? And finally, what will our balance sheet look like at the end of the period? To build a master budget, a company must first gather key information and make several estimates and assumptions. This slide provides a partial checklist of the data required for each step in the process. For example, to create the sales budget, you need to know the budgeted unit sales and the selling price per unit. For the production budget, you need to determine what percentage of the next period's sales you want to maintain in your ending inventory. For the direct materials budget, you need to know how many units of raw material are needed per product and what the cost is for each of those units. For manufacturing overhead, you need to budget for both variable and fixed overhead costs. And for the cash budget, you need to establish a minimum required cash balance and estimate any expenditures for non-current assets. Let's summarize what we've learned about the master budget. First, budgets serve two critical functions for any organization: planning for the future and controlling current operations. Second, the budgeting process is both technical and human. The most effective budgets are those that blend high-level strategic goals with detailed, bottom-up operational knowledge. Third, the master budget is a comprehensive and interconnected system that provides a complete financial picture of an organization's plans for a period. And remember, it all begins with a sales forecast. A mistake here will cascade through the entire budget. Ultimately, the master budget is the tool that answers the most fundamental questions a manager can ask about the company's future performance.